Hello Joe-Dolls, welcome back. Now if you're new here, welcome to the channel where we focus on finance, real estate, and other life topics. Be sure to subscribe and turn on the notification bell as I'm posting valuable new content on a weekly basis. Alright guys, so today I wanted to dive into the recent jobs report. I think this is a very important topic as many of our elected officials were waiting on this report to decide the fate on a possible second round of stimulus checks. Now, some economists and investors had expected that this past week's jobs report would be a train wreck, myself included, but we were very surprised at the results. However, Joe-Dolls, it's important for us to dive a bit deeper and not just take the results at face value. Now, early this year, like late April and May, we had a record-breaking number of Americans filing for unemployment benefits each week, despite many states' attempts to reopen their economies. Our early economic projections after the virus check indicated that unemployment rate would hit around 20%, which was on par with the unemployment numbers seen during the Great Depression. But instead, guys, the government reported this week that the United States added a total of 4.8 million jobs, and the official unemployment rate fell to 11.1% last month. Now, out of the total 4.8 million jobs the U.S. economy added, 2.1 million jobs are the number of jobs added by the leisure and hospitality industry in June, which accounts for roughly 2/5 of the total monthly gain. Like in May, the reopening of restaurants, bars, hotels, and some entertainment venues brought millions of furloughed workers back to their jobs. Now, there have been some people out there coming up with conspiracy theories and different explanations for the job numbers. Some have pointed to the possible measurement errors or the possibility that the books have been cooked. Now, after the jobs report was released this week, President Donald Trump took to Twitter and to television to gloat. He held a press conference where he said that we're opening with a bang and that we'll go back to having the greatest economy in the world. So, Joe-Dolls, I'm sure you're all wondering what happened. Are these numbers too good to be true? Well, the answer is not necessarily. Now guys, there may be some flaws in the data, which the Bureau of Labor Statistics has been transparent about, but they're consistent with real-time survey results from last month that suggested the jobless rate had plateaued. But the most important thing, Joe-Dolls, is to keep in mind no matter how you interpret the latest unemployment numbers, a large number of Americans are still unemployed, and in the end, we can only guess when they'll be able to get back to work. There are also plenty of reasons to think that without more aid from the government, we're going to be stuck in a slow crawl back to normalcy. 14.7 million is the number of jobs lost since March that have yet to be regained as the economy recovers. Now, while the United States has seen back-to-back months of record job gains, they follow 2 months that wiped out nearly 10 years of employment growth. Just think about that. This is why overall perspective is important. Now, as far as the unemployment data, it's possible that the latest figures are just less accurate than usual. Due to the spread of the virus, the response rate to the government's regular household survey, which it uses to calculate the unemployment rate, was 15 percentage points lower than usual. Also, the establishment survey used to track changes in payroll also fell slightly, with fewer people and companies responding. Therefore, it leaves greater room for error. Daniel Zhao, senior economist at Glassdoor, stated, data for the monthly jobs report is gathered in the middle of the month, which means it inevitably misses some of the most recent developments of a very fast-moving viral pandemic. Secondly, Joe-Dolls, the headline unemployment rate that has been widely reported, the 11.1 number, is almost certainly off by a few percentage points. Let me explain. Just like last month, a large number of Americans who were likely furloughed or had their hours cut to zero because of the outbreak were categorized as employed but not at work for other reasons. The Bureau of Labor Statistics says that if you include them, the jobless rate would be about 3 percentage points higher, or around 14.1%. Also, guys, some analysts did actually predict this. Surveys by Civis Analytics had found that the share of Americans who had lost their jobs since March fell below 12% by mid-May, which is in line with Friday's report. Also, Joe-Dolls, the unemployment insurance rolls suggest that a lot of Americans started going back to work by the middle of last month. The job data was gathered. So guys, in real life terms, it seems like a lot of people went back to work in outdoor industries like construction, and after truly massive layoffs in March and April, restaurants and retailers either rev back up in terms of hiring as some states officially reopen. With everything, guys, perspective and content is very important. If you take the latest job report at face value, there were still about 26 million fewer Americans with jobs and another 4.7 million Americans miscategorized as working. So the question we should be asking ourselves, Joe, is how many of them will be able to get their old positions back? And if not, what we need to do in order to support them in their time of need. Now, guys, on the first question, there's both good news and bad news. The good news is that most of the job losses we've seen during this crisis still aren't permanent as of yet. According to the Bureau of Labor Statistics, about 8 out of every 10 workers who say they've lost their jobs are only on a temporary layoff, meaning they could be called back soon. Now, that's assuming that business pick up at their old employers. Now, the bad, as I stated earlier, a lot of businesses are still laying off people, which suggests some might be closing down for good or running out of cash, even as some states are beginning to reopen. Bottom line is we still have millions of people filing new unemployment claims every month, not to mention the continuing claims. And by that, I mean the number of people processed and potentially receiving benefits actually went back up, meaning it's possible progress stalled and stopped, at least temporarily. So what this tells us, guys, is that our economy is still in a very delicate, uncertain place, and we are not necessarily on the verge of a rapid recovery, as some have stated will happen this year. Now, despite this, some conservatives are already using the latest job numbers as an excuse to declare victory and urge cutbacks on aid to businesses and the unemployed. Now, guys, I honestly think that this way of thinking is just not realistic and is absurd in so many ways. Tens of millions of Americans are still out of work, and there's no guarantee when or if they will get their old jobs back. Some businesses have retired workers with money from the Paycheck Protection Program, and it's not clear what will happen when that money runs out if, for example, sales are still slow. So, Joe, I feel simply letting aid like the enhanced $600 weekly federal unemployment insurance completely expire would not only be cruel to those who are still jobless, but could also slow down the pace of recovery by cratering consumer spending. Now, the economy is not as bad as it could be, but I would say it's far too early to just start declaring mission accomplished. As always, guys, this is just my point of view, but I would love to hear your thoughts and opinions on the state of our economy and the recent jobs report. Please leave your feedback in the comments section. Now, guys, if you found value in the video, please be sure to give it a like. It really helps me out with the YouTube algorithm so that we can continue to grow our channel. Also, be sure to share this on your social media platforms and subscribe and turn on the notification bell so that you get content updates. Thanks for watching, and until next